Okay, so this is the current trade, obviously, that's on the screens. We took a pop at some of these guys in here, and obviously the market maker then went for the dump to the bottom side, so we're really putting in a bear raid. Too many buyers in place here, aren't there? Too many buyers. So we're obviously looking at this and saying, okay, we're going to get that squeeze. We got the squeeze. Market maker went bullish against the squeeze. We got the 48s that we looked for just in here. Took a buy trade against that. Got a 6-tick winner. Scratched out. Scratched out, yeah. And then came back in again. Took another pop at it. You can see the book went flat. The book went flat. Sellers poured in. Took a buy trade against the book. Made some easy money again. So that's $1,000 on a little 5 lot again from that bottom edge. Very easy stuff, isn't it? Very, very easy stuff. So you can see how it's eventually evolved in terms of the overall structure to this. Market has a quality about it that says buy side, for the time being, at least anyway. We're still, have we broken structure? Well, actually we haven't, have we? In terms of the bigger macro narrative, we haven't actually broken structure, because when we broke structure the last time, it was here, wasn't it? Over here at 9 o'clock this morning. So if we broke structure here, well, that would have meant on this big macro picture, we don't really turn bullish until we could take out that 39.77. So based on that idea, that little 5 lot trade, by the way, $2,200. Is that all right, guys? What do you think of that little 5 lot trade? $2,200. Make that $2,400. Little 5 lot winner, $2,500 now. $2,500. Crazy, isn't it? $2,500, guys, on a 5 lot. Anyway, so you can see what happened. We haven't broken the big structure, because that was where the breaker structure came in, unless, of course, you're counting a lot more aggressive structures. If you're counting more aggressive structures, then, of course, you would have probably have counted the break of structures to have taken place against this capper price that we talked about earlier. So we had the breaker structure here, meaning that we are now in a bullish market structure from the lows. So this has not changed the narrative, has it? This is noise. This is what we call noise. So we're in a bullish structure, and we're in the kind of noise phase with the little inside structures. So very bullish market, very constructive market, making an absolute killing on that buy trade now, guys. Woo-woo! Killing on it. Look at that buy trade. Was that crazy good or what? Crazy, 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 crazy. We love a bit of crazy. So 47s now traded 63s. We like that a lot. And that's all based on that very simple narrative we had here. You know, very simple narrative here, 47 longs. And based on these selling pressures, able to buy into those selling pressures and take full advantage of the trap and pop a cracker onto your books here. 47s up to a high price there of 64s. Not too far off another $1,000 winning swing. Losing a bit of value into this at the present moment. The price has obviously managed to somehow outrun the value narrative at the present moment. So I'm happy to bank some money just shy of the $1,000 and say, cheers, Mike, give me some of that cash. Give me some of that monies. And we'll see if we have any more, in which case we're still in it with smaller size. And if it piles back off these top lines, then fair enough. We'll be watching to see if we get another opportunity to deal. Crazy good trade, crazy good outcome. $1,000 target is, of course, from the bottom edge, 46s. You're aiming into that 66s for $1,000 if you're bottom edge pricing, of course. If for us to make $1,000, we need to see 67s. Good outcome. 5 contracts, 5 grand. 5 minutes. 5 contracts, 5 grand, 5 minutes. Nice way to make a living, Simon. You better believe it. We were right about our exit price on bonds as well. That target price break of 142 really did end up killing the price. You saw the curve came right out. The knob spread really did double back on itself, giving you a bit of a strong suggestion that this is done and dusted at the bottom edge here now. So that was pretty clear that that was us finished for the time being. And we were right. It was us finished for the time being. 142 halves, rallying all the way back up to 142 26s. And very, very straightforward story. And there's our $1,000, by the way, guys, on that S&P, so well done. So we had $1,000 target in mind. A break of 67s would be $1,000. So we annihilated that, didn't we? So now we really are starting to press our luck a little bit here now. So happy to start banking the rest of our cash into these high prints here and say cheers, because it might well be dangerous at the highs. Now let's just check in on those regional banks. And you can see yet again, the regional banks very, very with us on this trade at the moment, aren't they? So we're just checking in with the regional banks to make sure we haven't missed a signal. The regional banks are still very much with us, and they've been with us since the cash market open. So there's the regional banks in purple. Yes, everybody sees that. Everybody checked the regional banks this morning, yeah? Everybody was aware of what the regional banks were doing. They are in focus still, guys. They are still in focus. You don't suddenly just forget about them. You don't just dismiss them as yesterday's news. They're still in focus. People still worried about possible. There was even headlines this morning about European banks having a few concerns. So straight away, I wanted to make sure we weren't seeing that concern showing up in the US markets. And obviously that regional bank bullishness really did give me a lot more confidence to pick up the trade off the lows. And that's a nice one. Regional banks, KRE, Mark, KRE. On this occasion, I'm just using KRE for regional banks. So when you look at regional banks and you look at sentiment, very confirmatory, aren't they? Is that a word? Confirmatory? Don't know. They confirm each other. So, yeah, I mean, I think, when you see the two main drivers coming into the markets, you've got to start recognizing that the two main talked about drivers coming into the markets, just that sentiment in terms of interest rates and that idea of banks, regional banks as well. When we get those two agreeing that we've got a bullish low here, we're in great shape into this one, aren't we? So I do like the buy trade, and I've liked the buy trade since 12 o'clock today when this first flipped over. And we've obviously had a very, very good positive pop, which has obviously been helped, as we know from the earlier conversation. It's been helped by that straddle call put level here. So we've got this very obvious value line. And again, what happened when we came into this? Does it look like they hedged this line this time? It doesn't look like they hedged this line at all, did they? It looks like they've came into this line and defended the line. Because obviously the candle pinned, and then we got a very small candle into it, like we did in the early stages of this defense here. And then they pressed as they hedged the line itself. But it doesn't look like they've done that, does it? It looks as if they tried to defend this price area at first. Then they maybe unwound, and they've came straight back in again as they saw there was no additional selling. But we can prove that point, can't we? How can we prove that point? Well, we've got several tools to look at. This could be one of the tools. We could look at several other tools. There's several tools we can go through to try and understand whether they are holding the line at this point or whether they are going to try and sell off through this line. And we start watching for these storylines evolving in these areas. All of these lines we're looking at are volatility lines, every single one of them. The VIX 9-day is bullish as we go through the bottom edge, so that's obviously bullish. The divergence on this is okay. It's not great, but there is definitely still not exactly a sell coming in. It looks divergent. You can see the difference the last time we tested this line here. You can see the volatility was pressing to new lower lows, suggesting that this was going to be hedged. So this doesn't look the same, does it? It does not look the same. The only thing that gave us a few concerns was the VVIX. Volatility of volatility was still rising. But they've all unwound beautifully. Good buy side pop. Life looks relatively good so far today. Cash market close, of course, in the background is the next main target for us. 393 on the SPY. 393 on the SPY. If we can take 393 bid, guess what happens? The big board goes green. The big board goes green. It's going to be easier to be a buyer when the big board goes green. Remember I gave you the long oil trade this morning? We chatted about it. I told you what we were doing. We gave you the measured move. We talked about the short covering rally. We had several retests since the short covering rally. Remember that trade? Well, we went 67 bid, just traded 69s. It was only worth $2,000 per contract. So I don't suppose we'll get many likes for that one anyway. So you can see $2,000 per contract from this morning's call. We talked about it when it was first testing in here, and we talked about that short covering rally phase, because at that stage it was short covering rally. What happened was that when it came back in, we started to actually get a long accumulation visibly starting to show up in terms of the trade. So obviously, as you start to see the trade starting to develop some confidence in it, especially when you saw this kind of pin candle here, ahead of the open, which obviously kicked off in here, well, you saw exactly what happened. So there's your cash open just there. The cash open was the break of that cap seller, surprisingly enough, right? So you know that they use that volume, don't you? You know that they use that volume to achieve something. Sometimes it's to achieve a big break to the downside to accumulate a long. Sometimes they use it to mark up prices from a long or vice versa. On this occasion, they'd got quite a good size on this long trade ever since the value flipped. Now, the value never flipped when we had the first trade here. The value flipped at that stage, didn't it? So from those low prices, it became very obvious a buy trade off of 67s was the place to be. And, well, as I mentioned, we're just shy of 69s for $2,000 per contract. No wonder I was shouting for you to make sure you're on board that trade, and why I told you just to leave the building early if you were not on that trade. It's paid out massively. That's the one that's really painful to take if you haven't been there, because it was so easy to be involved in that bit of business. $2,000 a contract, guys. 5 contracts in that, you're 10 grand up again. Another enormous day for all you guys that are trading.